Hello everyone, welcome back. Today is the 4th of June, the last day of the trading week, and today is a special day. As usual, the very first Friday of the month, we have the NFP. So in this video, I am going to share with you what is the current market outlook and what are some of the trading ideas I have for today. Now I'm going to start off with Bitcoin. What you're looking at right now is the weekly forecast I have done over the last weekend. Essentially, I'm just saying that the crypto market is kind of dampened due to comments from Elon Musk. Of course, the crackdown in China on crypto minings, and so it's just going to range for the time being. So how has it played out so far? Well, obviously, it's pretty much as what I have expected. It went up, all right, within the consolidation, this formation right here, and then it got resisted and came all the way down today. But anyway, what actually causes the drop? It was actually a piece of news that says Bitcoin dips after Musk tweets broken heart emoji emoji for token. So it looks something like this: hashtag Bitcoin with a broken heart. So this is it is just very interesting, kind of funny at the same time, that tweets like this from, of course, someone who is very influential can just keep on swinging the markets in such a manner. So which is why I've been reiterating a lot about the volatility, the uncertainty, the kind of speculation in the crypto market, and which is why you really have to have a very clear trading strategy if you want to trade the Bitcoin or the crypto markets. If we look at the current chart right now, this is the 4-hourly time frame. Right now the price has came down. So yesterday I did give a heads up that it has reached the top. There's resistance, and just trade within the range if you are doing it intraday. So right now it has came down, and it is right now about to reach this important level. Of course, on the intraday basis, this demand zone right here, because it is somewhere near the bottom of this symmetrical triangle. If we were to try to pull it out a little bit, all right, and connect the closing price, it is about to reach the bottom. So if you are holding on to this trade still, I would definitely encourage you to kind of take some profit away the table before things actually goes the other way around. Definitely, I'm not sure if it's going to break downwards or break upwards. That I have no idea at all. But in a midterm wise, short to midterm, I am still expecting more bearish movements. As you can see, this is a bearish flag. All right, needless for me to explain. So, and therefore, I'm definitely more bearish when it comes to the current situation. So you may want to wait for some sort of a pullback, or maybe you just want to wait for a clear breakout of this structure and wait for the pullback to the breakout level, and then try to sell again back to the 50% or into this demand zone. So you can go all the way to 30,000. But however, I still keep my longer view that it can still go all the way down to a pullback of 70% back to the 2017 high. All right, so that is for Bitcoin. Moving on, I want to talk about gold. So what happened yesterday is that I think if we look at the forex calendar for the week, we are seeing a lot of positive economic data, be it from the Euro or from the US, and I believe that has a lot to do with the vaccination rollouts that's kind of so-called successful right now, and it's helping to boost the economy. It's helping the economy to recover from pandemic. So And in the long after some times, the market sentiment started to shift a little, and it helped to boost the dollar, which has weakened a lot in the past few months, and therefore it also caused a very short term or a very sudden sell off in the safe haven assets such as the gold. And so if we were to come back to the gold charts, well, maybe just before that, let's also talk a little bit about the non-farm employment change tonight. Right here it says that the economic recovery gathers steam amid a successful vaccination campaign and government support, so which is what I have shared just a while ago. Supply constraints, rising inflation, and labor shortages are weighing on capacity production, as many workers, mostly women, remain at home, and government subsidies may discourage some workers to find a job. And businesses have been struggling to rehire workers, cope with surging demand, prompting them to raise wages in a bid to attract new employees. So there's still this issue going on in the labor markets, obviously in the United States, that now people are not working. One of the very big reason is because of the unemployment benefits. There's a saying that people are earning more than they actually find a job. That's a very big problem. And the thing is that if you want businesses to raise wages, but at the same time you're trying to increase tax for the wealth and businesses, it's kind of contradicting. You want them to raise wages, but at the same time you're taxing them more. That's not going to work out. So that is really a very problematic issue in the United States right now. But in any case, it seems that based on the forecast, it is going to do a lot better than the previous month, simply because of the success in the vaccination rollout, stuff like this. Economy is opening up. If you watch NBA, you are seeing almost a fully filled stadium. That's how it is right now. Existing shortages are likely to be temporary and could set the tone for the Fed's early tapering talks. But I think this is really the major ones that the market is talking about, is that there's some kind of a sentiment that the Federal Reserve might taper the QE. Alright, I'll just call it QE. Alright, or money printing in the near future as the economy start to recover, stuff like this, or rising inflation. This is definitely going to be positive for the US dollar. So of course we still have to look at the data for the NFP later on, and we'll have a much clearer picture going forward. So let's come back to the charts. So coming back to this chart, before I go on, let's quickly take a look at the weekly forecast. And how has it been right now? It came down more than what I have expected for the week, but definitely I believe I did say that there's a possibility. Always there's a possibility for gold to go down a lot further. And what we are seeing right now is that the price has reached a very important demand zone, or a very important level, which is the equilibrium level. And right now we are already seeing strong demand, pretty decent rebound from this area, and so if we are bullish on gold and we are considering a price to buy the gold again, right now we do have a case for buying the gold. So let's anyway quickly go back to the chart in the 4-hourly time frame. Alright, so like I said, this is the equilibrium zone. It's right now at the bottom of this rising channel, coming to the bottom, not really yet at the bottom. So for myself, I'm still waiting for a pullback, a retest of the low before it actually goes up further, and hopefully that helps to create somewhat like a double bottom. But based on my experience, if the gold really goes up really turned bullish, it always goes all the way up without much pullback. I mean, that's a fact. That's always how it goes. I mean, just go and look back at the charts and you'll understand what I'm trying to say. So the thing is that in the 1 hourly time frame, if right now we see that it breaks out of this resistance, then I would suggest to wait for a pullback back to this region, and you should start to attempt to buy the gold already. Don't wait for the pullback all the way to the bottom. I mean, you can, but there's a very great chance you're going to miss the entire bullish wave. So as usual, you have two ways to do it. Either you buy right away when it comes back and test. Sometimes it may not even come back to this level. It might just push back a little bit and just went all the way up. So if it's able to pull back to this price, of course, after it breaks out of this zone, I would consider it to be really lucky to buy. But otherwise, you can always place half position based on the total risk and wait for another pullback that forms something like a double bottom to buy the and throw in the next half of the position to buy the gold. So that is a very simple strategy that you can adopt to play around with your risk. I mean, trying to balance between risk and reward. But otherwise, I am not looking to sell. But if if you really think that the dollar may continue to pick up and that may put pressure on the gold, which is not wrong at all, I might look at this. Is that you can wait for a pullback into this very important supply zone. I'll just change it to red. Then that's where you can sell again. And if I'm not wrong, this is at 61.8%, right? So this is another consideration. Of course, I'm kind of biased towards buying gold. So if I were to sell, like for example, if you are very bullish on something, but however there's a chance, there's an opportunity that you can actually sell it, you might want to consider just going half or just a third of your usual risk. So as much as possible, you're not going against the major trend that you think it is, right? So that is pretty much for the gold. Moving on, we have the Nasdaq. All right. So the Nasdaq, I think it has finally turned out as what I have forecast for the week, right? So it finally, after a very long consolidation, volatility picks up, and finally yesterday it finally went down and found support at the demand zone right at the bottom here. Exactly what I have forecast. So if it continues to go down, I think there is still a good chance for it to go even lower. Because if the Fed starts to taper, and that's the sentiment right now, all right, it's really moving more towards that the Federal Reserve has to taper, then we are essentially, essentially there will be a cooling off in the stock market because people will be thinking that, oh, the hot money is going away, and it's going to hit the stock market, and therefore I think for today, since we have a range right here, wait for the pullback. It might form something like a bearish flag, as you can see, very obvious, or it may go a little bit. I think somewhere right here, all right, 13,600 is a very good price to consider selling again. So you put a Fibonacci, that is the 61.8%. So you can set sell limit. I think it is totally fine. It's totally rational and logical to continue selling the Nasdaq or the US stock market as of now, and because I don't think the pullback has the reversal has been strong enough for another stronger bullish wave to follow through. So I still think we can continue to sell. So we just wait for the pullback, back to the top right here. because it may form a bearish flag, or it may just pull back to this important level before it goes down. So somewhere between 13,580 all the way to 13,620, that is the area we can continue to sell the Nasdaq. And target wise, back to the previous low, slightly below will be the demand zone right here, because this is the neckline of this double bottom. And of course, it can go all the way to this level. This is obviously a demand zone we should look out for. Okay, all right, so that is for the Nasdaq. And last but not least, we have the euro against the US dollar. All right, so for the euro against the US dollar, I think it have developed pretty much the way I have forecast as well. So if we look at the weekly forecast, we just played it. Yes, it actually came down. All right, still working towards the demand zone that I've plotted out right here. So coming back to the charts, we have seen that the price has already broke below the rising channel right here. All right, it broke below. Pulls back, found resistance again, forming something like a head and shoulder. I don't think I have to plot it out to you, it's very obvious. And this is the neckline. So right now it broke below. The next thing you can do, if you are still bearish on it, wait for the pullback to this breakout level and continues to sell. Alright, this is very straightforward. Otherwise, you can always pull a Fibonacci. If it's a strong one, usually by 38.2% it goes down. Of course, there's also possibility it can go out a little bit further. Retest the 61.8% level, because this is obviously a very strong supply zone, which is why if you look at the 1 hourly time frame, you actually saw that after it pulls back down here, alright, it came up, touched this level, and shoot all the way down. It pulls all the way back, right? So obviously there's a very strong supply right here. So if price would be able to come all the way back to this level, which is 1.22 to retest, this is a pretty good level to sell again. Alright, that's what I believe. Otherwise, once you reach the breakout level at the 38.2% pullback level, 1.2170 is where you can go and sell again. And I think 1.2170, this price has been coming out a lot of times, so definitely a good price to sell the euro against US dollar all the way back to this demand zone, which I have already plotted out during the last weekend in my weekly forecast. Alright, so that's very straightforward for the euro against the US dollar. And last but not least, we have the oil markets. So the US oil right now is as I have mentioned in my forecast, again, just a quick one. In my weekly forecast, I talk about it that we are definitely expecting the markets to go higher. Alright, reason being rising commodity prices, fast inflation, stuff like this. So right now we saw that it came off from the top, consolidated, and just as what I have talked about yesterday, right, is that it will push back to this demand zone. If it finds support, we can go for a buy. And right now we have seen the price rebounded off, breaking out of this consolidation structure. So are we still bullish on the oil? Yes, definitely. Like I say, I think it can go all the way to 70 before we see a much stronger supply, much stronger sell off. So as of now, if you are looking to trade the US oil, well, in my opinion, right now I don't intend to make any trade on the US oil. Reason because number one, I don't think I want to sell. Okay, I don't think I want to sell. But if I want to buy, I think the price is really too high right now. Unless the price is able to push all the way back to the previous high right here, or the breakout level right here, then I would definitely consider to buy the US oil again. Okay, and I think that's for now. Wait till it actually pulls back, then we'll go and talk a little bit more about it. So with that, I have come to the end of today's video. Thank you so much for watching. If you like what I've been doing, do hit the subscribe button, hit the like button to support my work. And once again, see you again next week.